Hi, good morning again. Just wanted to make sure that everyone has their latest pay stub with them. We will be needing that for you to walk through the tax withholding estimator. This is a tool that I personally have used since well before I worked for the Internal Revenue Service, and it has never failed me. This is something that I tell clients to use after I prepare their income tax returns and I see that they have a balance due. This will help you owe roughly between $500 and none, and receiving a refund. I do not believe in refunds. I believe that we need our money every day, all day, and there's no reason for the government to hold it and for you to receive large refunds. The information will be as accurate as the information that you input. So if you input the incorrect information, your output will be incorrect. I'm excited to start with you in a few moments. Thank you. All right. Good morning. Good morning. Good morning. My iPad is telling me I have this meeting. I'm here. I got it. Good morning. Good morning. Good morning. Grand Rising. All right.
Brush our teeth.
Hi. Okay. So I do want it to be interactive. Um, does everyone have their pay stubs? You can speak. You can unmute yourselves. Yes. Okay. Admit. Okay. Cool. Yay. All right, so just to introduce myself, and I'm sure there are people who are still in the process of joining us. So my name is Kay Renee. I am a former auditor and collector for the Internal Revenue Service. I worked for the IRS for over 9.5 years. I basically started working at the IRS when my son was 8 months, and he's now 14. I quit 5 years ago, September 2017, to start my company, Purpose and Passion Tax Company. I never in my life wanted to be self employed. I love knowing that the eagle is landing every 2 weeks without a shadow of a doubt. And my taxpayers who are audited encouraged me to start a company. They said, "K Renee, you make taxes." Well, they didn't call me K Renee, they call me Miss West. Miss West, you make taxes really easy to understand, and we need you on the other side before we make it to the IRS. And so I prayed and I asked the Lord, I was like, "All right, if this is what you want me to do, please make a way." I prayed and I asked God for specific things. And honestly, y'all, everything lined up. And I was like, all right, I quit. And so here I am now, 5 years later. I've celebrated 5 years being in business and helping people sleep at night. So I love talking about taxes and helping people get over their pride and taking the fear out for people. Um, so today we're going to go ahead and
Okay.
I'm sorry.
Someone's not muted.
Okay, so if you can mute your mics, like if you're not speaking to me, that would be great, and that'll help everybody else as well. Um, so what we're gonna do is let's go ahead and get started. So again, what you're gonna need is you're gonna need your most recent pay stub. If you are looking at the video, you may see me. If you see me up and stretching and doing weird things, I was hit by an 18 wheeler on Sunday. So my back is in pain. So just ignore whatever I personally have going on this side. As a matter of fact, I'll just go ahead and turn my camera off. I just wanted you all to see that I'm a real person behind the scenes. So I'm going to turn off my video. That way I won't be a distraction. Um, okay, so let's go ahead and get started. Let me ask you this, and you can unmute your mic. So, like, does anyone have the irs.gov website pulled up? I do want to, this is interactive. So like, I do want you to see that you can use this. Basically what I did was I typed in irs.gov. So if you want to pull out your laptop, your iPad, your tablet, whatever, your computer, you can do whatever you need to do. Like I'm literally walking through this with you. Some people, but some people get confused and they don't know what to do, right? I know I personally, I'm not the most tech savvy person. I'm supposed to be recording this. Hold on one second. Sorry, I just remembered. Record my record on this. All right, so someone is unmuted. I'm gonna mute you, Ray. All right. Okay, so someone's in the chat. There's a message. Thanks for recording. You're welcome. All right, so let's go ahead and get started. So go to irs.gov, and I believe, let me just do it again so you can see. So when you pull it up, this is the first screen that you're going to see. So none of these are tabs, and under each tab, there's something different. So we are going to go to the Pay tab. And over here on the right-hand side, it says Tax Withholding Estimator. Please click on the Tax Withholding Estimator. And here it gives us different reasons of why you use the estimator. The IRS encourages everyone to use the tax withholding estimator to perform a payment checkup. This will help you make sure that you have the right amount of tax withheld from your paycheck. There are also several reasons to check your withholding. Checking your withholding can help protect against having too little tax withheld and facing an unexpected tax bill or penalty at the time next year. At the same time, you may prefer to have less taxes withheld up front, so you receive more in paychecks and get a smaller refund in tax time. So I tell my clients that I want you to go home with the most money, right? Like to me, it does not make any sense to be air quote tax rich, right? Like basically, if you are barely making it all year, or maybe you're not even barely making it all year, but like, why would you just let the government hold your money? I don't believe in that. Like, we're working, we want to take our money. You should want to take your money home with you every paycheck versus receiving a large $5,000, $6,000 check once a year. So I'm not sure how many of you know, but basically the IRS is behind in preparing income tax returns. And so some people are literally still waiting for their refunds. Right. It is October, and there are people who are still waiting to receive their refunds from when they filed their income taxes at the beginning of the year. I can honestly say, hand to the Bible, and yes, I'm Christian, that none of my clients called me about a refund. None of them asked about a delay because the people who come to me, they know that I encourage them to take their taxes home with them throughout the year. Take your money home with you on your paycheck. There's no reason to allow the government to hold it for you and collect interest on it. Okay. So I believe in taking your money home with you throughout the year. All right. So here we go. All right. So this is information about you. We are now, so I'm just going to make up something pretty much, but yes and no. So I'm head of household. So you would select like your filing status. If you're single, that means you're unmarried. If you're married, filing a joint return, that means you filed with your spouse. If you're married, filing separately, that means that you're married, but you like, I can't do it. Like, you gonna file your return, I'm gonna file mine. Now, when you select to file married, filing separately, you are now missing out on some tax credits that you could have only gotten when you filed a joint return. But sometimes it's just better. Like, look, you owe child support. Men and women both owe child support. And let them get your refund because I'm not attached to that. Head of household, that basically means that you're single and you have children, and so you are filing head of household. All right, you could have minor children. You could be a qualifying widow or widower, and basically that means that your spouse passed away, maybe the year during the tax year. You actually still, let's say you're a qualifying widow or widower, then you actually still, for you, it basically would still be as if you were filing a joint return, but you're no longer, but you wouldn't do that. So you would just select qualifying widow or widower. And basically, it's going to still give you those tax breaks as if you were married. The next question is, do you or will you have a job or a pension that regularly, good Lord, I can't say this, forgive me, withholds federal income taxes from your paycheck or pension payments? So I don't receive pension, so I'm going to select no. So the IRS gives me this website gives me this warning. It says, attention, you have indicated that you do not have income from a job or a pension that is subject to periodic federal tax withholding. Since you are not subject to tax withholding, this tool won't work for you. So that means I did something wrong. Basically, if you receive wages, you're going to select yes because your taxes should be coming out of your check, okay? Definitely withhold, like, again, if you enter the wrong information, you're gonna get the wrong output. So we want to make sure that we're doing this right. And so to ask you questions again, this is information about you. Will you be 65 before or on January 1st? So basically, if you will be 65, when it comes to the age 65, the senior, I won't say it's a senior citizen discount or anything like that, but basically, if you're 65 or older, then there's special tax breaks that the government gives you. And so basically, you're considered 65 if you'll be 65 on January. You'll be considered 65 in 2021 if your birthday is on January 1st. So they give the next day. Like, it's kind of weird. And so if your birthday is on January 1st, then you say yes. Are you blind? I'm claimed as a dependent on someone else's income tax return. So these may be that one right there. That's for like children who, and we can click on it, like children who may be in college. Technically speaking, the parents still claim them, but they work. So they would select that. So it says most people under the age of 19 and most students under the age of 24 who live with their parents or other relatives are dependents and should select yes here. So yes, maybe your child lives off campus, maybe they live in another state, but that's because they're going to school. So again, this person would still say yes. A married taxpayer filing a joint return may not be claimed as a dependent unless they're filing only to claim a refund of taxes paid and should usually select no here. Okay. All
As a
right. And then
reminder,
it's, I'm sorry.
I have a question. So when
Yes.
as a single person without kids can you file for head of household?
Um, Generally, you may claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost of keeping up a home for yourself or your dependents or other qualifying individuals.
Thank you.
So, you're welcome. And so, this too, guys. So, when you're using this tool, you can select on these questions and then it's going to break it down for you. It gives you more information. Okay. So, it says if you're blind, people receive more, they have a higher allowance if they're blind, if they're over the age of 65. All right, so I plan to claim dependents on my tax return. So I'm going to select this. And then let's just see what this question mark says. So a dependent is usually, but not always, a child or other relative who meets a set of criteria. A dependent may be a U.S. citizen, a U.S. national, or resident alien. Most dependents include children under the age of 19, students under the age of 24 who live with their parents, or other relatives who live with you and whose care you are responsible for. All right, so let's close that. And then let's select next. There's a question, I think, in the box. When as a single without kids can you file head of household? Um,
Yeah, you just answered that for me. Thank you.
okay, you're welcome. How can I get more back on my paycheck and not wait? We're going through the steps, right? All right. So income tax withholding. So again, this right here, the whole purpose of this calculator is to help you receive more money back when you are on your W-2 or throughout your paycheck. I'm sorry. So this is to help you receive more money back however often you are paid, or it's to have the proper amount of taxes withheld, right? So again, my goal as a tax professional is to have my clients not owe taxes. It's for them to go home with most of their money and not receive large refunds. That's the whole purpose of this mo. So if you just walk through these steps, then you'll find out whether or not you're having adequate taxes withheld or if you're having too much or if you're having too little. That's what at the end where it says results, that's going to tell you whether or not you need to change something. Okay. All right. So describe your type of income. So we're just going to say it's an hourly job. Um, Select what best describes when you earn income from this job. All year. Yeah. So all year. I'm paid every 2 weeks. So I'm actually still an employee. Yes, I have my company, but I still work for the federal government, to be honest. I'm just creating. Well, let me look. I got paid last Friday, I think. All right. So my last paycheck was a good representation of how much I earned. Yes, that was correct. Enter wages per pay period. Um, I legit don't know. Um, I don't even know what paycheck we're on. So let's just, oh, I know we're paid 26 times a year. Um, okay, so let's divide it by, we're in October. So 2, 4, 6, 8, 10, 12, 14, 16, 18, 20. So let's say I've been paid 21 times this year. All right, let's see. All right. What did it just say? All right. Based on the information provided, it looks like your annual income from this job. Is that correct? Yes. All right. Enter taxes paid per pay period. I'm just gonna make up a number, guys. I don't know what my real pay stub looks like. So let's say 700. And then we're gonna take this. Now you have your actual pay stub, so you can actually enter these amounts directly from your pay stub. All right. Yes, I contribute. Oh, let me just say this too. So if your job has a matching program, like I know that most of the time I can say when I started at the IRS, like I felt like I could not afford to contribute to my retirement plan. Let me just say this. I really could not afford to not contribute to my retirement plan. Yes, money was funny, income was strange. Money was extremely tight. But I can now say that when you start contributing to those funds, to that retirement account, like if it's matching, so with the federal government, they'll match the first 3% and then they'll give you half, up to 5%. So like it's free money. You can't afford not to take the free money, right? So now that account that I felt like I couldn't afford to contribute to, now that account has over $100,000 in it. Um, like 14 years later, but I legit did not contribute to my retirement account until like I had already been with the government for 3 years. So make sure that you are taking the free money, basically, okay? Like I know it might seem like it's a sacrifice, but those funds are coming out pre-tax, and it's free money. Like say yes to the free money, okay? um so enter amount per pay period, let's say it's 300. So now we're going to go back here, we're going to do 300 times 21, so 6,300. I don't contribute to a health savings account or fed I forgot what the FS is for. Um, these are plans where money comes out pre-tax. And so it can help you. Oh, so the flexible spending arrangement. So these funds, they'll come out pre-tax, which actually can help you or hurt you. It actually just depends on your specific situation. So I used to do um the flexible spending account, and actually it would have been better for me to have those funds come out pre-tax. That was just for my specific situation. Taxes are not a one size fit all, although it's more than likely approached that way. Taxes really are not one size fit all. You may do something and it helps you. You may tell your friend about it and it harms them. And that's just because your tax situation, your financial situation, and the details are completely different for your household than it would be for somebody else's. Okay. Um, all right. So I'm getting a bonus. I got a bonus. So none of the above apply. All right. So do you have any other sources of income, or have you made any estimated tax payments? All right. So I'm self employed. So my self employment is completely different. So I really make more money from my self employment than I actually make from my job. So taxes paid 30,000. All right, let's go. Had taxes withheld or made estimated tax payments of such. All right, so no, that's not me. All right, let's go. All right, adjustments to income, self-employment, health insurance, contributions to a self-employed, um, retirement account, student loans. If you have student loans, let's say we have student loans. Um, let's just cap it at the max, 2,500. If you're an educator, you get to, if you're a teacher, you get to write off $250, and it's 500 if both you and your husband or both you and your wife are educators. Um, if you're an educator, thank you. We really do appreciate you. So the only people that can write off moving expenses are members of the armed services. If you pay alimony to someone, then that income is now, well, it's always been taxable, but now, unfortunately, let's say, because normally we hear that it's a man, right? So let's just go with the stereotype. So let's say it's a man who's paying alimony. Prior to the laws changing, he was allowed to write off. Let's say he paid 50,000 in alimony. He was able to claim that 50,000, and it would be reduced from his taxable income. Now, unfortunately, that income is taxed, and it's still also taxed for the person receiving it. So amounts paid to a spouse or former spouse under divorce or separation instruments, including a divorce decree, a separate maintenance decree, or a written separation agreement, may be alimony for federal tax purposes. Alimony is deductible by the payer spouse, and the recipient spouse must include it in the income withholding. You can deduct alimony or separate maintenance payments made under divorce or separation decree executed after 2020. So it used to be a write-off for the person paying it. However, after 2020, it's no longer a deduction for the person that is paying it. Executed before 2021, but later modified if the modification expressly states the repeal of the deduction for alimony payments applied to the modification. Alimony and separate maintenance payments you receive under such an agreement are not included in your gross income withholding. So if you are receiving alimony, you're going to want to start making quarterly estimated tax payments as well, or just know that when you file your income tax return, payments are always due by April 15th. I don't care if you file an extension, the IRS says, okay, you're welcome to file this extension. However, taxes, the money, the cash, the dinero is still due by April 15th. Yes, you may not have to file your income tax return until October 15th. So if you file a form 4868, that's going to give you until October 15th of that same year to file your income tax return. That's the paper. But if you owe money and you have not paid it by April 15th, that is where you automatically start accruing penalties and interest because the money is always due by April 15th. Now, I do understand the last 2 years have been crazy and insane. So taxes weren't actually due April 15th. They were due after that. So whatever the deadline is for you to file your income tax return, the money needs to be paid by that date. The extensions are never for money. It's only for the paper return. Okay. Let's look here. What about the IRA deduction? It's so it's either pre-tax or it's post-tax. So if you are doing a Roth IRA, that money has already been taxed. If you're doing a traditional IRA, which is just a regular IRA, then that money is pre-tax. So does that answer your question, Shelly?
Yes, it did.
Okay, awesome. All right. So let's move on. Is anyone confused? Is it making sense? Because if I'm confusing you, then I'm not helping you, and that's not okay. Can someone say yes?
Yeah,
No?
I think you're doing a great job. I just feel like I don't have enough of the papers I need to know all the information because some of this stuff is not on my check stub. But that's just me.
Oh, okay. So let me say this. If it's not on your pay stub, then more than likely it's a non-issue for you when it comes to finding out if you're having the correct withholdings coming out. Because basically your pay stub should tell you everything. You know what I mean? So if you're contributing to an IRA, then that should be on your pay stub. Does that help?
Understood. But when it gets to the part where it's talking about the deductions for student loans and charitable contributions and stuff, I think that might be on the next page or something for more accurate results. I feel like I don't have that stuff yet.
Oh, okay. I got you. So then, yes, so then you can come back to that and you can just re-enter that information to help you. So yeah, if you have those expenses, then yes, definitely go ahead and walk yourself through this and answer those questions as they are fit for you. That will definitely help you have a better, a more accurate result. All right, so let's go ahead and change it. All right, so if you withdraw money from your retirement accounts early, then you may be given a penalty unless you qualify for the exclusions for the penalty. Now, you're still gonna have to pay the tax, but the penalty for withdrawing from your retirement accounts early is 10%, right? So just know that. But there are things that life situations that allow you to withdraw those funds without being penalized, but you do end up still having to pay the taxes for those things. All right, so tax withholding estimator. So here we go. So we're going back to that about you part. If you are head of household, then you're going to end up with a standard deduction of 18,800. If you're married, it's a different amount. Hold on 1 second because I'm going to tell you.
If you're married, I'm pretty sure it's 25-1.
Yeah, it definitely changes. Most people don't realize this, but like as tax professionals, like someone could just start doing your taxes. The IRS doesn't require them to have any type of education or continuing education. I personally don't roll that way. I like to stay up to date and to, help y'all correctly, right? So I'm actually in the process of completing my test for the tax season 2022, which will help me be listed as a annual filing season preparer on the IRS's website. So I literally like just read through this past week. All right, so the standard deduction for a single person for 2021 is $12,550. For married filing jointly, the amount is $25,100. If you're married filing separately, then it's automatically going to be the same rate that it would be if you were single, which is $12,550. If you're head of household, it's $18,800, which is what we see here reflected. I'm going to take the standard deduction. And then if you're a surviving spouse, that means your spouse passed away. Remember earlier where I said your spouse may have passed away, but the IRS is still going to give you the credit as if you're married. And it still actually gives you that credit for 2 years. So for surviving spouse, which is the widow and the widower, that amount is the same as filing joint, which is $25,100. If you are over 65 and you're married and you're blind, then that standard deduction for you actually increases by $1,350. For a single taxpayer who's also a head of household who is blind or over the age of 65, an additional deduction will be $1,700. So again, this is why I say taxes are not one size fit all, because you may not know that someone is blind, right? There's different degrees of having vision impairment. So you may tell someone, oh yeah, you could do this, but then kind of find out they actually have a larger standard deduction. And the difference is simply because that person has a vision problem that you weren't even aware of, that they never disclosed to you. So we want to be careful when we're giving other people tax advice when we really aren't tax professionals, just because someone else's situation could be completely different. All right, so so let me ask you this. Do most of you, and we'll just put it in the comments, because again, I want this to be beneficial to you. So can you put, if you take the standard deduction or if you itemize, and really what I'll do is I'll just make this answer whatever majority of the participants are. So if you could just write the word standard or itemize. One, two, three, four. 1, 2, 3, 4. Oh, Lord. Okay. 1, 2. So it's even. Okay. So it's even from the people. So you don't know the difference? Okay. So basically, standard deduction, basically, okay. So how we just went over this amount right here, 18,800. So basically this is the standard deduction. So this doesn't take into account itemized expenses, which are right here below. So it could be medical and dental expenses, which are over I believe it's 2% of your income. It's also taxes you paid, qualifying interest that you paid, gifts to charity, casualty losses, or other itemized deductions. Okay, so I will say this. So and I'm going to put mine down here too. So I itemize. All right, so we're going to do the itemized version of it because most of us itemize. And let me just open it one more time. Look, one more again, and I'm putting right here, final answer. All right, so 1, 2, 3, 4, 5, 6. Oh Lord. Okay, let me do it this way. 1, 2, 3, 4, 5, 6, 7, 8. All right, so final answer is we're gonna do itemized. So basically, let me say it this way. When a person has a standard return, it's super easy. You're so funny. So basically, like it's just 18,000. It doesn't matter that they have all these other expenses. So I have people, sometimes clients who will say, yeah, well, like I gave 500 to, church, I gave 200 to Goodwill. And I'm like, okay, but your 5,200 doesn't beat the standard of 18,800. So with that being said, if a person just insisted on their itemized expense, then guess what? They're actually losing, and they're going to pay more in taxes because they prefer to do 5,200. So they're actually going to make themselves liable for paying taxes in the amount of 13,600 when they didn't have to. The government, the IRS they try their best to be fair, and shoot me if you want to. I'm just telling you how they feel, okay? So they try to be fair and they allow you a standard deduction. But some people taking the standard deduction would be a loss for them, right? Because they pay more for other things. So for me personally, as a head of household, the standard deduction still doesn't really benefit me because I own a home, I give to charity, I have other expenses, my taxes like that outweigh the standard deduction. So if your itemized expenses are 25,400, then basically you're automatically not going to be taxed on that versus the standard deduction. Does that make sense? And you can like unmute your mic just to tell me if it makes sense or type it in the comments.
Okay, say that one more time.
Girl, which part, friend?
The itemized deduction. The way I understand it, if you itemize it and the number of your itemized is less than the standard deduction, then you should take the standard deduction.
Yes, yes. But if your itemized expenses exceed the standard deduction, then we're going to go itemize. Exactly.
That makes sense.
Yeah, there you go. See? All right, you had it, friend. There you go. Yes.
Okay.
Yes.
I have a question. So I put that I do standard because I'm thinking that does not include all the deductions that I'm doing, like on the Schedule 1 and the Schedule C and on the business side, right?
That's different. Your business is your business. That's not so. Your business is your business. So you're allowed to write off expenses that are considered ordinary and necessary for the production of income. That has nothing to do with this part right here.
That's what I thought. Okay, that's why I put standard for the actual deduction. Okay.
All right, cool beans. All right, so since we're doing itemized, can I tell y'all a funny story that is true? So if we're friends on Facebook, then one thing you know about me is that I love Mexican food. Like I'm here in Cali, and the memes are true when they say like people from California go to everywhere else and be like, y'all Mexican food is trash. It is true. When I was in college, I literally had one of my homeboys who just happened to be Mexican fly me back to California for Mexican food. I was like, this place is trash. He was like, just look for a spot with a bunch of Mexicans out there, like, and go eat there. I did it. I was like, bro, they so authentic. The menu is in Spanish and they don't even understand what I'm asking for. He was like, oh my gosh, like this is crazy. And then I went and it was like chunks of beef. I was like, bro, I can't do it. I cannot. Like it's not. I'm sorry, Houston, Texas, Mexican food, trash, gutter. So I went to a burrito truck. Like I post about this one burrito truck all the time. Literally, when people come visit me, even from out of state, they'll be like, Renee, take me to the spot. And I'm like, cool, I got you. Don't worry about it. Literally have stopped at the Mexican truck, at the taco truck on my way to really go out to eat. Like that's how bad it is. So I'm eating my burrito, y'all. It was a carne asada burrito. It was delicious. Do y'all know that doggone burrito had a rock in it and I broke my tooth? Yes, So this summer I broke my tooth. And so, most people be like, I'm not going back to the truck. No, we're still going to the truck. We're just not going to eat burritos from the truck. So basically, like, met with the dude. At first, I think he thought like I was playing when I was like, "Sir, you broke your burrito broke my tooth." And so, I ended up like sending him some messages showing him like, "Look, dude, I make money, so don't think anything. Like, I'm not trying to get over. I just really want you to fix my tooth." And I was honest with him. I was like, "I promise you, I'm still gonna come back." So I sent him my medical bill. He came to my house. He brought me a check. We met. We laughed. We talked. And I was like, "You basically gonna get so to fix my tooth? It was like 820." And so I was like, "You're gonna get all 820 of this back." Because I'm going back to your truck. Like, y'all, I went the next day back to the truck. It don't stop nothing. But so for me this year, and I had like just regular dental work. So that's what made me think of this, of my tooth being broke. So literally don't be looking at my mouth. That's how much, I spent on my mouth this year. Um, so that's what made me think of that. So it said you was eating fast because you was hungry, wasn't you? Look, I really was starving. I really was. Someone asked what's the name of the truck. So I'm in Northern California, in Stockton. Look, I don't know the name of the truck, but let me tell you where it's at if you are near Stockton. So the truck is outside of Home Depot on Hammer Lane. Like there's also an Indian food truck that be parked on the side too. So it's between Home Depot and Dollar Tree, right there on the side street. Indian food truck is popping too. Like I don't even like sitting in restaurants because I love eating off trucks. Like I just feel like the grimier, like the better the food is. I know it's bad. You don't have to be so. Oh, you're not in SoCal. Oh, dang. I'm sorry. All right. So moving on. All right. So then taxes paid. So I have a house. If you see right here, it's capped at 10,000, right? But I'm gonna say that I paid 13. It's not gonna give me that because it's capped at 10,000. Qualified interest you paid. I don't have any of that. Gifts to charity. We should be giving, if we're Christians, then we give 10% of our income. So let's say I've given 30,000. All right, casualty losses. I didn't have any of those, but let's just see what they are. Generally, you may deduct casualty and theft losses relating to your home, household items, and vehicles on your federal income tax return if you took a loss. If the loss took place in a federally declared disaster area declared by the president, you may not deduct casualty and theft losses covered by insurance unless you file a timely claim for reimbursement and you reduce the loss by the amount of any reimbursement or expected reimbursement. And then you can see this topic if you have more information, if you need more information.
Question.
And then, yes.
Is there a max for the gifts to charity?
Let's see.
Because I didn't see it.
Yeah, so really it's not, to be honest, but let's just look at what they put. So to be deductible, you must make charitable contributions to qualified organizations. Contributions to individuals are never deductible. To determine if the organization that you contributed to qualifies as a charitable organization for income tax deduction purposes, go to the tax exempt organization search. So let me tell you this, when I was an auditor for the IRS, I audited someone. They gave, and at this rate, I don't remember the amount, so I'm just going to make up an amount. That person donated, let's say 12,000 to their church. So I, as an auditor, I went to this tax exempt organization search, and we'll just go here right now because we can. And let's see. Search for tax exempt organization. We're gonna just create something. We don't want to search all because I don't have time for that. Let's create a city. Let's create a city. So you know what? I'll just look up my church. I don't know their EIN number, but we're gonna do it from A to Z. Did it check? Lord Jesus. Okay, we don't have all day. Let's do more items per page. Let's do 250 items per page. No. Okay, I was trying to see if it will let me put the name, so it doesn't. Stockton, California. Did I do that already? And let's do search.
Click on that search bar drop down. It might have some options in there.
Go. Tell me where it said again.
Right there where it says search by, you see where it says employer identification number? What's in the drop?
Yeah. Oh, so it. Oh,
There
you so
you go.
smart. Yes, look at you. All right, so my church is called Greater Christ Temple. Good job. See, this is why we need the whole village. Bam. Okay, so look. So when I'm giving my tithing unto the Lord, this is a true tax exempt organization. So we good. But the worst time to find out that, like you're giving unto the Lord. Well, I won't say it's the worst time, right? Because if you're doing, according to the Bible and you're giving as you should, it does. If you can write it off, cool. If you can't write it off, cool. But it's just that sometimes during an audit, a person may find out that their church isn't actually a tax exempt organization. And basically, I had to explain that to one of my taxpayers when I was auditing them. So that was unfortunate. All right, it says if you own a property and don't have a lot of deductions one particular year, can you file standard? Absolutely. You could file standard you could file standard in 2020. You could file itemized in 2021. It's according to whatever it is that year. It's you're not trapped by that. It's basically based off of your specific situation for that year. So yes, you can change it. That's totally fine. Ray raised a hand. Oh, you fancy? What that mean? Okay. What am I supposed to do with that, Ray? Ray, say what you got to say, friend. Yes, sir.
Okay, so you were just talking about taking a property loss a little while ago.
So we going back. Okay, wait. Hold on. Take me back. Where at? Here? Were we here or somewhere?
You were right around. It's hard for me to see because I'm looking on my phone.
Oh, okay.
And the screen is tiny. But
are you talking about the casualty losses?
Yes.
Yes, sir.
So last year, I did take a casualty loss where the insurance did end up paying me out for some damage that was done to my house.
Okay.
And so I was just wondering, how would that affect my taxes this year?
So did they pay you in full?
Yes.
So then you don't get to claim it. So I'll go back and I'll read this again.
I got you.
Or you want me to read it or you want me to be quiet?
No, ma'am. Go ahead and read it. I'm sorry.
No. I'm serious. You could be like, I got it. You don't need to read it. I'm fine with that.
No, go ahead and read it again because I can't see it on my little tiny phone.
Okay, no problem. So it says this is regarding casualty losses. And I'll just put it in English. Basically, if your insurance reimburses you for it in full, you don't get to claim that as a loss. But it says, per this little the question mark, it says generally you may deduct casualty and theft losses relating to your home, household items, and vehicles on your federal income tax return if the loss took place in a federally declared disaster area, and it has to be declared by the president. So there were some floods and some fires. Those were nationally and federally declared disaster areas by the president. So those people get to take those losses that they suffered. You may not deduct casualty and theft losses covered by insurance unless you file a timely claim for reimbursement and you reduce the loss by the amount of any reimbursement or expected reimbursement. So basically you can't double dip. If let's say there was a loss, let's say, your I'll just say car. So let's say your car was, here we go. Exactly. Let's say your car was totaled. You was hit by a 18-wheeler. Okay. And let's say the insurance only covered 25,000. You then could, and let's say the vehicle was worth 30,000. You could then claim the $5,000 loss, but you couldn't claim the 25. You couldn't claim the whole $30,000 loss because the insurance already gave you 25. So to take it from both sides, that's called double dipping, and that is not allowed.
Got it. Thank you.
Hey, you're welcome. Any other questions while we're on this page? Are y'all learning or am I boring y'all?
We learning.
Okay. Ray, why you laughing? All right.
That was a funny question. Am I boring y'all?
Oh, well, I try to make taxes fun and interesting, so some people would be bored. I don't know. All right, so right here, you see here where it says like, all right, per this little person we done built, their itemized expenses is 51,700. But remember, beginning, like for head of household, it's really only, what is it, 18,800? So this is why for this person, itemized is better. And then it says right here, if your itemized deductions are less than your standard deduction, the tool will use the standard deduction. Use my itemized deduction, even if it is less than my standard. So you can ask them to use the one that has the least beneficial benefit for you, but like, why would you? That doesn't make sense. All right, here we go. Let's see. Child. Okay, so we want to have children. We want to have children. You indicated you have dependents. All right, how old is the little boy? Is 14. All right. He don't go to daycare anymore. Thank you, Jesus. All right. Based off our income, we do not qualify for earned income credit. Okay, we don't qualify. Foreign tax credits, we don't have any of that. Educational credits, we paid off our student loans, so we don't have that. Per our income, I don't even think we're going to qualify for that. Home ownership, retirement savings. Let's see, we're a homeowner. Oh, okay, we didn't do any residential credit. Mortgage interest credit for those with a qualified mortgage credit certificate. I'm not even sure what that is. You may be able to claim this credit if you were issued a qualified mortgage credit certificate by state. Okay, so that's something I've never encountered for any of my clients. But if you have a qualified mortgage credit certificate, then you are going to be able to include that in your itemized expenses. Elderly or disabled, no. This right here, general business credit. If you own or operate your own business, you may be eligible for business credits. In order to determine your eligibility and amounts, visit business tax credits. The alternative minimum credit, energy efficient vehicles. That good old Tesla. Enter the amount of alternative vehicle credit for which you expect to be eligible. All right, so these are different things that you're able to include in your itemized taxes if you qualify. We have a question. Why did you skip the retirement savings? I don't know why I skipped it, but let's go back, Miss Linda. All right. Enter the amount of any retirement savings contributions credit for which you expect to be eligible. If you make eligible contributions to certain eligible retirement plans or to an individual retirement account, that's an IRA, then you may be able to take a tax credit. The amount of the savers credit you can get is generally based on the contributions you make and the credit rate. Okay, so let me just find out like how how tax retirement savvy you are. Let's find out. So what's the maximum amount? And don't Google it. If you don't know, you don't know. It's okay. Don't worry. I'll tell you. What's the maximum amount that a person can contribute to an IRA annually?
6,000.
Good job. Yes. Okay. And what if you're 50 years old or older? What's that amount?
I think it's 7.
Ooh, you got it. You got it. You got it. I'm sorry I don't have no prizes, but you got it. All right. So let's just put, we're going to make this person, they're going to be over 50. She been here. She got a little life to her. Okay. So let's go. All right. Here we go. We are finally at the results page. All right. Your results. Based on the information you entered, if you do not change your withholding, you are likely to get a refund. Expected tax withholding is $48,009. Y'all, somebody is joining us at the conclusion of the whole matter. Well, praise God. Hallelujah. Okay. So it says expected tax withholding is $48,900. Anticipated tax obligation is $22,521. So it's saying that the estimated overpayment is $26,379. So here's an important note. The accuracy of this estimate depends on the accuracy of the information you provide. The IRS makes no guarantees about the accuracy of this estimate and accepts no liability resulting from your use of the estimation. So remember earlier at the very, very beginning, I said this is only going to be as accurate as the input that you provide. So if you enter the wrong information, then your results will be wrong. Okay. So just make sure that you are entering this information as accurately as possible so that it can help you. So questions about this? Okay, that's great. That means I did what I was supposed to do. All right, so it says the recommendations in this tool are designed to correct your withholding for the rest of the year based on whether you have had too much or too little federal income tax withheld to date. These adjustments are usually not appropriate for a full year. So you should use this estimator again at the beginning of the next year to determine the appropriate full year amount. And so if you receive a raise, and you did this in January, but you received a raise in July, then I would encourage you to come back and redo this once you receive your new pay stub regarding your increase. Because again, it's only going to be as accurate as the information as you input. But if your financial situation changes, then that's going to be an issue. And now you may be under withholding, which means you'll end up on a balance due for the next tax season. Okay. So I really, 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 really hope that this blessed you. Hold on one second. Another question. So it would tell you then how many withholdings to put on the W-4. Yes, ma'am, it would. Let's see. Hold on. Let's see if we can. Let's change this person. Y'all know we got this person over here balling. So let's just change they withholding. Okay. Let's say this person only, paid 500. This is about to change the whole game. And we're going to say let's say this person gave 500 to charity too, because that helps them too. Wait. Okay, not right now, y'all. Hold on. We busy. Okay, so here we go. Now this one is different. All right. Your results. If you do not change your withholding, you may owe taxes at the end of the year. Expected tax withholding is $19,400. Anticipated tax obligation is $27,609. Your estimated underpayment is now $8,200. So here we go. Your job, so it says your anticipated refund is $0. Your job annual pre-tax wages is $83,700. To get your desired refund amount, you will need $2,342 withheld from each paycheck, $1,642 more than your current tax withholding. Remember that getting a larger refund can mean less take-home pay depending on your situation. Submitting a new W-4 resets your withholding to standard withholding if lines 3 and 4 through 4C are blank or 0. Your standard withholding is $261 per paycheck based on your filing status and income withholding. The recommendation for adjusting your withholding to get a refund of 0 will be based on the standard withholding, not your current withholding. All right, so here we go. These recommendations personalize your withholding to reach your desired amount. Edit a new W-4 online or via paper as follows. Check online and enter paper or your personal information. Select head of household filing status. Enter $2,081 in additional withholding per pay period line. On form W-4 is already filled out. Okay, so here it goes. They changed this, so I am sorry. They changed this a little bit because normally it would have just populated for us. I'm trying to open it. All right, here we go. So here it is right here. So maybe this is better, but before they would have just did it. So right here, it's telling you what to have extra held so that you don't owe. So it's telling you, so you would fill this part out at the, can you guys still see my screen or I could just be talking? Can someone just unmute and say yes?
Yes.
Okay,
Yes.
cool beans. All right, awesome. So you would still enter your information, and right there it's already checked that you had a household. And it's telling you right here extra withholding, what to have withheld for your pay period. You would sign it, and then the employer would do the rest. So you could literally just print this out if you find out that you're not having adequate taxes withheld. This part doesn't matter. It's just the instructions for the very first sheet. All right, so did that answer the question? Miss Nina, do you feel like that answered your question? Yes? Okay, cool beans. Awesome. All right. So that's it, y'all. Welcome to the party. Any questions over anything that I went over?
I got a lot of questions.
So you need a consultation, sir.
No, look, my brother just called me and I missed the last 15 minutes of the good part.
Well, it's recorded, so you'll be able to see it somewhere. I don't know. Look, I know taxes. I don't know technology, so I've been recorded it, and I if we friends on Facebook, you'll be able to see it on my Facebook page. But I don't know how to. I don't know. All I can say is I don't know. Like at some point, I'm gonna have to. Anthony gonna have to show me how to do something. But I did. It is recorded. I just don't know how to make it available yet.
Okay.
All right. Let's see what else is in this chat box. Tell us about your business. Oh, okay, cool beans. Sure. So basically, my slogan for my company is I solve tax problems. So yes, I prepare income tax returns. We could even just go to my website. But so I solve tax problems. I'm a former IRS auditor and collector. One thing that I'm like really known for in the tax market and is that I do offers. So I'm sure you've seen the commercials where people say, I owe the IRS and we settle for pennies on the dollar, blah, blah, blah. So I actually do that in real life. I have people who people come to me because they owe the IRS like money and they can't afford to pay, or maybe don't want to pay depending on their situation and what's going on for them. So I do a pre-offer assessment to see if a person actually qualifies for an offer. Everyone is not a good candidate for an offer. And so I don't even like to lead with, I can get you an offer. No, I may not be able to do that. Like I'm very honest. And so I do a pre-offer assessment. I ask questions that are not on the IRS's website. There is a pre-OIC qualifier on the IRS's website. And I always tell people, like, if you think that I would charge you offer and compromise for something that you could do for free, then you clearly don't know me at all, because I would never do that. It's somewhere on here, but basically I ask the questions that the IRS does not ask you about. Remember, the IRS wants you to pay every dime that you owe, but there are certain rules and certain situations where you don't have to pay those taxes, and I know those situations. So I see if a person qualifies.
Renee, it's right there on the
You
previous.
saw it?
Look right under the found 30
right
matters.
here.
Go down a
Girl.
little bit more, down.
No, I wanted to come to this right here. So
Okay,
this
great.
right here, people will use it. Like I've had someone, a client, she was like, well, I went through it and basically the IRS said I don't qualify. And I was like, okay, so let me do this. I promise you that if you don't qualify, like I'll give you back your money. And she was like, really? I was like, yeah, we'll go through mine. And if you don't qualify, like I'll give you back your money. All I can say is, long story short, she was like, Renee, oh my gosh. I was like, girl, I'm not impressed. I told you. She was like, I'm so glad that like I took the chance. So basically, I've never had an offer rejected by the IRS.
It's on his Square Cash reader didn't work, so we can bring him money
Okay.
Monday.
Is that my friend?
But he mean money,
yeah,
like cash.
Yeah, cash.
Well, I'm getting freaking cash for. That's why I put it on my credit card.
Okay.
Oh,
we got-
Well, that's
That's right.
right. I'm like, that's my friend Ray. all loud.
That was
We gonna get ready. But basically, so like I solve tax problems. I'll tell you if you don't qualify for an offer, I'll tell you the best way to resolve your issue. So maybe if you need a payment arrangement, the IRS basically does what's in their best interest. That's what the IRS is about all day. I actually listen to my client and I help my client solve problems according to what's in the best interest of them while still being legal and doing it the IRS's way. So I prepare income tax returns. I teach tax professionals. Let's see, income tax, like different, for traders, married couples. I request transcripts for clients. I do consultations. I do trader tax status consultations. I teach other tax professionals. A lot of my clientele comes from other tax professionals because I help them. Some of them, a lot of times, other tax professionals don't know how to get offers accepted. I don't share my secret sauce, but I do work with them. And per their client, like they'll think that their preparer, got their offer accepted. They have no idea that their preparer doesn't even know what to do. That they hired me and I did it for them. So, I'm just regular over here trying to help people, be great. Every client review is real. Like all I do is cut and paste what they say. So for example, this is not how I spell my name, but this is how this client wrote it. And all I do is copy and paste what they say. This person actually like prayed with her, like she was having a rough time. These are all I can say is like all reviews are real. I'm honest. It is what it is. If you have like specific questions, then I can answer them for you. I just like try to be me, and I know that in this space, a lot of tax professionals don't look like myself. So I try to make taxes real and just be honest with people. That's it.
So, Cousin Renee, I have another question. Last one, promise for the day at least.
Yes, ma'am.
You made a comment about the annual filing season preparer. How do we
Yes.
find that on the IRS website so we can find the people in our area?
Okay. Okay, let's go there. Hold on. I don't remember how, but we about to figure this out. Oh, right here. Because evidently I created this tool for somebody, not somebody, but like for something before. All right. So this right here is the annual filing season program. Oh wait, so no, that's okay. Hold on. You know that like we're all over the country though, right?
Yes, I do. I was just
So
trying to find somebody a little bit closer to where I am.
So
or at
you
least get ideas. Yeah.
okay. So this is how you find it. So I went to irs.treasury.gov/RPO/RPO.JSF. And so I'm gonna put my own that's my own zip code and search. And bam, there's me. And we can make up somebody. Let's see. There's no one by the last name Carter. Let's do Williams. There you go. We found somebody. Ta-da! So yeah. Did that answer your question? Thank you
Yes,
so much for
ma'am.
your time. This is very helpful. You're welcome. You're welcome. You're welcome. All right. So I'm going to stop sharing. I don't even know how to stop recording. How to stop recording. Lord Jesus. All right. So we're going to stop recording. All right. We're going to stop sharing. Did I stop sharing? Okay, I think so. All right, everyone. So that's it. Any stop